which means when you buy today, you don't know what is the price you're buying. Another way around, you sell today, you also don't know the price you're selling. Only 2 days after, you know what's the price. Okay, so even though it's daily dealing so every day you can do like working days you can do a buy or sell trade, but the pricing is after 2 days which means okay, so you no need to worry about unable to sell the funds because the buy and sell can easily done by the platform, which is Poem's platform also can do it. Okay, anytime you need the money, you just sell it and then withdraw it back to your bank. Okay, they don't like have any lock-in period or whatever. Okay, so yes, diversify your portfolio using unit trust because this is the easiest way lah. When you are kickstarting, you don't know everything, but you can easier. It's the easier way to get a diversified portfolio lah. Is invest in unit trust because your money is pooled with all the investor. Then the fund manager will help you to put inside different asset classes or different equities, different bonds, and then you can have the exposure. Real estate as well, because unit trust also have a REITs unit trust. Okay, so diversification is like can diversify across different asset classes, which is equity or bonds, sectors. Okay, also if you like technology funds, they also have, or you like healthcare one, gold mining funds also will have. Okay, like geographically for this one is like if let's say I think China very good, but I don't know what is the good shares to buy. Yeah, you can explore using unit trust because the fund manager will pick the shares for you already. Okay, so you can reduce the risk of losing all of your money if one investment performs poorly. So if let's say you hold a single stock like 1,000 worth of shares, then let's say the company do very bad, close the counters, then you lose all your money, right? Or they only offered a very, very low price, like you even cannot take back your principal one, right? So if you have this unit trust, you won't lose all your money lah, if compared to you invest just in one single stock. Okay, so risk management in unit trust investing. So what is the risk when you invest in unit trust? Because some people they actually like very scared if come to unit trust, they're like, unit trust will lose money or not. But to me, actually, unit trust is something like same as stocks lah. Stocks also got good stocks, bad stocks, right? Like not performing well. So unit trust also. So the matters is you need to choose a good one, a performing one. Okay, so all the investment actually is the same if you choose the good one and then it's growing one, then you earn money also because I also have other clients like they only invest in unit trust, they don't invest in stocks one. Also got this group of people lah. Okay, so yes, market risk, this one is everyone will suffer also if there's any lah. So if let's say for now like the Trump, if he talk anything, then the market, the share price will be affected. Okay, this one in unit trust, if your unit trust is like heavily invest in stocks, then yes, will be affect also. The next thing is currency risk, actually same as your stocks lah. So some of the fund manager that invest across geographic and then currencies also like US or focus on UK or China one. So the currency or the geographic, like some politics on that particular country will also affect the performance of the unit trust. Next thing is interest rate, because we all know like this year there's a rate cut, right? So actually interest rate is related to bond. So if you have any bond funds, right, or single bonds so when interest rate go up, bond price actually will go down. Another way around, so if interest rate go down, like for now, actually the existing bond price will go up. So which means bond fund actually for now is quite performing but subject to those bond fund, like the bond they're holding is like existing bonds. If those bond that still having a very good yield one. Okay, so the next one is managerial risk. This one is because you're not handling those like the portfolio yourself, right? So the performance sometimes also subject to your fund manager lah. Okay, even though they will use their best, okay, to achieve the performance that they want. They also have their KPI actually. They have their KPI on this year, they need to achieve how many percent, something like that. So the performance also subject to the fund manager strategies. If very good, very in time, then the performance of the fund will be very good also. Okay. So next thing, so this one is the risk management also. So this one is how to select a funds for you lah, because we have a lot of funds. So for if you are like low risk kind of people, like very new, you can actually look into like money market funds, okay, or income funds lah. This one basically is like bond funds. Okay, bond fund is kind of lower volatility. Okay, so if you have higher time horizon for investment and then medium risk, maybe you can consider balanced funds, which is multi-asset funds, can have a mix of 50% bonds, 50% equities. So for this kind of funds, actually got bonds, right? Sometimes we have dividends also. Okay, next thing is single asset classes. So you didn't do diversification across asset class. So it's pure equity funds or property funds like REITs funds. Okay, so you can depends on your risk preference, then you can choose different funds for you. So this slide's actually also similar to that one lah. So if you're not willing to take much risk, but you want a better returns, if compared to bank deposits, then you can consider income funds, which is bond funds lah. Okay, so bond fund basically they give a stable dividend payout, or you can also choose money market funds. Money market funds also invest in very safe instrument like short-term bonds. Okay, so if you need an income to cover everyday daily living expenses, some people they are building their retirement funds or their passive income, something like that. So they might consider this income and growth, okay, which is balanced funds. So you can have a mix of shares and bonds inside. So next one, if you have higher, like longer term, like time horizon, and then to maximize the return, of course, mostly unit trust investment, they encourage if you have more time to invest lah. But if let's say you have shorter time horizon, there are also some options like money market fund actually very liquid and very short term only. Okay, so if you have longer term and then your risk preference also higher a bit, then you can consider those capital appreciation funds like equity funds, like some of the global index funds or like Singapore equity funds actually also performing. Okay, so you can consider actually if you have the power, you also can consider a mix of them lah. Okay, just remember to choose a good one. It's like you choose every of your investment. Okay, so when it comes to consider to invest unit trust, first thing you need to know what is your risk profile. Okay, how much risk you are willing to bear. Okay, so sometimes it depends on your age. Okay, because you are closer to retirement, or you retired already, you don't want your money to be locked, or you don't want a longer term one. Okay, or your financial institution, you have any loans, liabilities, or investment objectives, sometimes that you save for your children's education. So all those can be factored in this risk profile. So if let's say you take in everything, you are mediumly risk, then you can consider multi-asset unit trust, something like that. So if you're higher risk, then you can consider equity funds. So investment objective, so also the same, is like you aiming for capital preservation or capital appreciation. Okay, so subject to the asset classes. So if you're aiming for capital appreciation, of course, most of your holdings is in equities. Okay, and then your geographical regions or industry. Some people they like technology fund, but don't know what is the good stock, so they might choose invest in unit trust. Because they have like fund managers choose a good stock for them already. So next thing is investment strategy, because this one is the goal of the funds. So if let's say if you go into the website to see the unit trust, right? So sometimes they will write lah. You just look at capital preservation or capital appreciation. So if you see capital appreciation, mostly is high risk one, which means is equity fund. If capital preservations, mostly is bond fund or money market fund, something like that. So if balance fund like multi-asset classes, mostly you will see capital growth also lah. Because that one, if you got equity inside, mostly is for capital growth lah. Okay, so it's the investment strategy also counts. Next thing is foreign exchange risk. So mostly actually for those unit trusts like uh global equity funds most of the fund house is, if available using Singapore dollar, right, they will do a hedging for the forex lah. So no need to worry. But if let's say you want to invest in like foreign unit trust, also have in Philip we also have like unit trust quote in USD, also have euro, also have. Okay, so foreign exchange risk is actually applies to all investment instrument. Then time horizon. So if you have longer time to accumulate the profit, you can consider like capital appreciation funds, like equity funds. So if you have shorter, you can consider like safer options, because in the short time they might not drop very, like might not be very volatile, might not drop like 10%, something like that. Okay, so if you have it depends on the time horizon, you can choose different funds also. Okay, so the next thing is fund manager. So yes, you can choose a trusted one. Some people they like Eastspring, also have Fullerton, we also have PIMCO, like very well-known one. If you are more comfortable with them, then yes, you can choose them as a priority, because all of the fund house actually they will have various funds lah. So for example, like PIMCO, they also have bond fund. They're very well known in bond fund, but now they also have balance funds. Okay, so if you are more comfortable with their company, and then yes, you can also choose the funds that is issued from the company. All right. Okay, so this one is the like the summary lah. So if you are higher risk, you aim for high risk, high return, then you can go for specialized, is like more focused one lah. For example, specialized in technology, specialized in healthcare, okay, specialized in gold mining company. Okay, so it's like more niche lah, the sectors. Okay, then global equity funds. So those will be mostly 100% in equities one. So if you are moderate risk, moderate return, you can consider balanced funds. Okay. And lower risk, lower return, you can consider bond funds. Normally will give a very good dividends. Money market funds also. Okay. This one is for mostly for liquid liquidity lah. Okay. So okay, balanced fund, this one got a remarks lah. It's a mix of equity, bonds and money market instruments, because all of the funds that will have a big cash portion one. Okay, so some people will also ask me when it comes to unit trust, they might have existing investment link policy. So like what is the difference? I just keep it very short, this one, because today our aim is unit trust, right? So for investment link actually is another way for you to invest in unit trust. Okay, because you see investment link, right? Which means there's investment portion. So what they invest in actually is unit trust. Okay, so that is a combination of coverage, insurance coverage, and investment component. But actually, like I think like 80 or 90% of your funds actually is invested to the funds itself, like to the unit trust that you selected. So for this policies, actually the insurance company, they will give you a list of unit trusts that's selected. You can choose from the list. We can discuss with your FA, the financial advisor, to choose the good funds. And then also have a little bit insurance coverage, but not so much. I think basic one, like death benefits, those are. Okay, so your premium are used to pay for units of the sub funds that of your choice. So let's say you choose the Alliance Income and Growth in your LLPs, then your premium is used to buy those funds. And then yes, they might add up, eat some of the premiums to take it as like management fees or handling fees. Okay, so some of the units are sold to pay for insurance or other charges. So yes, at particular time, they might sell some of your units to pay for the insurance cost. Okay, so for investment in policy is a mix a vivid insurance, I got unit trust also. But if your main goal is to invest, you want to invest in unit trust, right? Actually, you can consider just invest in unit trust, because mostly for those ILPs, I believe the time horizon quite long. Okay, like the policy will be a few years. For unit trust, you just invest it anytime, like 2 weeks. You don't want this unit trust, you can sell off. Okay, you can have more liquidity. So if you are just want to invest, so you can just consider to invest in unit trust itself instead of using the ILP to access. But some of my clients, they might consider unit ILPs because of some ILPs actually they do like have the access to AI funds, like accredited investor funds. So that particular unit trust is not issued to public one. Okay, so for those funds, if you are like quite interested in those, and then but currently your financial may be unable to declare as accredited investor, right? Then you can have access to those accredited funds using ILPs. Also one of your ways. Okay, so next one. Thematic investing. So this one actually is that like one of the characteristic of investing in unit trust. So this one is like you, for example, I want to invest in China. I think China now very strong. Okay, but I don't know what is the good stock, what is the good investment. So I just use unit trust. I just choose those is China focus or Asia opportunity fund, something like that. Then I can have the access because the fund manager will pick the good stocks for me. So for this kind of investing, actually is that you have a theme of your investment. This one is a behavioral in finance. So some people they're very focused on like technology. So yes, unit trust also have technology funds. So you no need to pick those single stock by your own. You just find a good unit trust. Then you can have access to a list of tech funds or even healthcare funds, environmental friendly funds, okay, something like that. So for this one is one of the good point of unit trust investment. Okay, so next one, money market fund. So why I put it behind, because this one is one of unit trust. Okay, but this one actually is that their like your money put in this money market fund, right, is invest in cash or cash equivalent or very very short term bonds, that securities lah. So actually if you are POEMS holder, right, if you opted in our smart park, actually your money is parked in this money market fund already. Okay, so this money market fund actually can generate you a very good return lah. I think for now, because the interest rate very bad, what I can remind is the smart park, I think is giving around 0.99, something like that. But the good thing is no lock-in period. Anytime you can use the money and they give you daily return. Okay, so actually for like if you are like very new investor, you can actually park your money there. Okay, at least your money is working hard for you. If let's say there's a very good investment opportunity, like suddenly, okay, one of your stocks drop, okay, you want to invest, you can directly use the money to invest. There's no lock-in. Okay, so yes, this one is a cash management investment solution to offer you a diversify in your portfolio, but also liquidity. So good things is very liquid. So for our smart park, right, if you got opt in this smart park facilities in your POEMS, you just you have cash above $100 in your trading account, you already automated invest in our Phillip Money Market Fund. Then if you wish to invest in any stocks, right, like currently suddenly one of the US stock drop very fast, and then you want to buy, you just use the money to buy. we won't stop you. It's just that the function embedded in your wallet. Okay. But for money market fund, actually Philip also have institutional class lah. And then the liquidity also, if you want to use the money lah, also very fast. Within 2 working days, will be back to your wallet already. Then you can use to buy shares. So the good thing about money market fund is very, very liquid. They won't lock you, and then they also give you daily return. Next thing is preservations of capital. So yes, because for this one, they only invest in these short dated and highly rated securities to minimize the volatility lah. Because we all know people who park money in money market fund is they just park a while maybe, or they use it like to hedge against the inflation, something like that. So for money market fund, normally the aim is capital preservation. And if you observe, you can go to see website lah, whatever money market fund, if you observe right, all the chart will be very straight one. Why? It's because for Philip case lah, we also hold money market funds. They will do amortizations on the price. Okay, what is this? So this one actually is, for example for those short dated high securities. For example, in Philip one, we mostly invest in MS bill. You can think as like a T-bill for you lah. So for those T-bill, we already know the rate, right? For example, now I think the new one is 1.3 something. Okay, we already know the rate we will get lah if we put your money inside those portfolio. So we can calculate actually what is the return for put your money in those short-term debt instrument. Then we will spread it out every day. We give you a bit. Okay, instead of you get back lump sum after the maturity. For money market fund, they will split up every day, give you a bit. Okay. So next thing, diversification. So your money put in this money market fund is not just parking in. They also put you in different place. Later I have an example to show you what's the holdings look like. Mostly it's very, very safe type of short-term bonds. Okay. And then operational efficiencies, because this one subscription and redemption, if you're using Smart Park actually just to deposit fund inside, when you want to use, you just withdraw the funds. Okay, just like the cash, you just operate like a cash in your trading account, but got this money market fund function inside. But if you do it like, for example, the normal Fullerton also got money market funds lah. You just simply do a buy and sell order. Okay. So this one, if let's say today you buy, after 2 weeks you sell, right? You want to use the money already, they will also give you this 2 weeks return. Okay, so you get back everything lah. And then the yield, okay, so this one actually is like money market fund, mostly they provide a very attractive yield like compared to your fixed D. And also the good thing is ours, this money market fund, no lock-in period. Okay, so this is the part better than fixed D lah. So if I compare it to bank deposits, right, because now interest rate very low, some people they have some idle cash, they know where to put. Some people may choose to put in bank fixed D lah. Okay, but your counterparty is just a single bank counterparty. For money market fund, actually, we help you to invest the money to multiple counterparties. Okay, like ours, Philip money market fund is mostly like government bonds lah. Then liquidity for bank one, if you access the cash before maturity, they might have penalties, or you cannot get any interest. You can get back a principal only. But for money market funds, we don't lock you, and then you can same day or next day you can take up the money with your interest. Okay, because we don't hold interest, like they want actually is return. Okay. And then operational is because for this one, if you want to do fixed D, right, you might have something to sign lah. Okay, but for money market fund, you just do a transaction, buy transaction, sell transaction. If you are very familiar in investing in stocks, this one will be very easy to you. And then the yield, and then for bank fixed D, of course, because they are capital guaranteed, then they guaranteed the yield also. So mostly the yield determined will be not so attractive if compared to money market fund. Okay, but this money market fund actually is active management, so which means the yield will be fluctuate also lah, according to the interest rate environment. Be slightly better than bank fixed D because for this one we diversified, we put you to different place. Okay, so first, and one more thing is this one is not a guaranteed investment. Okay, for this one is still investment. We cannot say money market fund is capital guaranteed, but it's a very, very safe type of investment. Okay, why? Later I will show you the allocation. And then if you go to website to search, you can see the chart also a very straight one. Okay, because that's regulated to only put your money in those safe type and then short-term instrument. Okay, so fees and charges, bank fixed fee, they might have some embedded one, okay, between client and bank. And then for this money market fund, actually is similar to those unit trust. Is embedded in your price already or your yield already. So which mean if we advertise this one can give you 1%, and then the yield already included the fees and charges already. Okay. So this is the example of our Phillip Money Market Fund. So if your money is in money market funds, right, where your money will be allocated in. So our strategy lah, Phillip one will be heavily in this MS bill. KMS is our Monetary Authority of Singapore, right? Okay, I believe you all know. And then also some of the bank short-term bonds. So you can see all the holdings, right? Okay, they are regulated, only can put in safer type and then very short term. And then for money market securities is this type lah. For also put some of your money in fixed D, okay, and then in other money market funds. So which means your portfolio is quite diversified, but all put in a very safe type. Instead of you put yourself in fixed D, right? You can also select to put here, okay, because safe type lah, and then you have a liquidity also. Then the other example, this one I want to show you the diversification lah. This one is other unit trust. Then this one actually is balanced funds, which mean the multi-asset classes. So you can see the asset allocation actually is half-half. Okay, a part in equities, part in high yield bonds, and then convertible bonds, and then some portion in cash. For this one is they're more heavily in bonds lah. Okay, equity part also there. So you can see the top 10 holdings. Okay, Microsoft, Amazon, Nvidia. If we go to buy single stock of those, then it costs a lot. But I think for this fund, minimum entry is 1,000 only. Okay, and then you can see the sector diversification also, not only in IT, okay, also in other like community, healthcare, financials, okay, real estate also a bit. Okay, so if you just buy a single unit trust like this one, you can have exposure to bonds also, equities, like those good equities also. Okay, so next one, this example is to show you the asset allocation as well. You can see quite diversified. Okay, mostly this one will be shown in the fund fact sheet of the unit trust itself. Okay, so IT, and then financial, and then healthcare, whatever. Okay, you can see the locations, and then geographically. Okay, if you see global equity, mostly is I think mostly is US, but this one actually is I think Asia Opportunity Fund. So will be mostly in Asia lah, Asia country. Okay, China, India, Taiwan, Hong Kong. Okay, so the asset location will be like those good shares in Hong Kong or China or India lah. Okay. So yes, so if you are very first time to invest, okay, you can start to diversify your portfolio now by using unit trust, or even you just put your money in money market fund, you're also doing a diversification. Okay. So yeah, it's lower risk compared with others financial product like stocks and shares. Okay, due to the holdings, because if you hold those all the holdings in the unit trust actually will cost a lot. Okay, and then we almost have 2,000 funds across our poems because I believe if you approach bank, they also sell unit trust, but their options is very limited. Philip, you can have over 2,000 funds for you to choose. And then I confirm you can choose a good one. Okay, so yes, if you have any questions, you can contact me. Okay, and then do you guys have any questions so far? You can see one Q&A. Okay, upfront sales charge. Okay, sales charge, right? Okay, for unit trust, if you invest in poems, if you can do online, you need to pass a client knowledge assessment test lah. So if you're able to pass that test, right, actually you can do the trading with zero sales charge. Okay, but if you approach for advisory service like you approach me lah, okay, then for cash investment in unit trust we charge a 1%, and for CPF OA we don't charge anything. Okay, so for management fees, yes, I believe all of the unit trusts will have management fees, but it's all embedded in the price or the return that they advertise lah. So if let's say you see a unit trust you're interested, you see the price, right? They already embedded the management fees inside. Okay, so those management fees you can find it on the fund fact sheets also. They will also declare this. Okay, where do you put ETF on the risk? Oh, risk and return. I think I put in the risk and return, right? Actually, for REITs ETF or even REITs funds will be inside this higher risk and return. Because for this one, actually REITs will be uh categorized in this one specialized fund. Okay, because there are more niche only in REITs counter all those REITs counter, and then not so much diversification Okay, so it will be inside higher risk, high return. Actually for REITs, I believe you guys buying is aiming for dividends Okay, so yeah, for this one is high risk, high return category. What is the advantage of UT over ETF with lower TR? I believe is unit trust is more actively managing Okay, because got people, got fund manager, they every time monitor this for you. Yes. And then would you say ETF is the fastest or beginner friendly something? I would say ETF from my personal view, ETF or unit trust actually these two quite similar, but when you are first stepping in investing world, then yes for me it's yes. Even myself, when I first start in investment, right, I also start with ETF or even unit trust first, because this one is like safer. You can have a portfolio instead of you hold a single stocks, so you can have a well diversified portfolio inside. So to me, it's a yes. What is the Microsoft funds if you mean this one, right? I think this one I cannot speak the full name here. You can text me if you want to know, or I can let you know the company. This one is from Alliance, a very popular funds. Are there any ETF similar to MMF? Not that I understand it. I don't think so. Yeah. Okay. So I back to the first page better. Okay. Yeah. Okay. So my contact and my email is over here. If you have any further questions, you always can reach out to me lah. Wait, what is your number to text? This one. Okay, so this is my handphone. You can WhatsApp me or email me also can. If you have any further questions you want me to follow up. Okay. So besides of this one, have any other questions? I will stop here for a while, like 1-2 minutes. And then you guys can save my contact lah, or email in case you need any assistance in investment. My own license actually is in managed account, bonds, and unit trust and insurance. Okay, so for stocks and shares or even ETF lah, actually you can consult your remisier or your broker or dealing team better. They are the best person you can speak to. Okay, I didn't see any new questions. Chat box. All right, thank you, Joseph. Thank you, everyone. So feel free to reach out to me after this. So if you don't have any question, thank you so much of joining me today. Thank you for spending around an hour with me lah. So I hope you gain something today. And thank you. Okay.